We're in Toronto covering the Minds and Money Conference, and I'm with Frank Holmes, CEO of U.S. Global Investors. Frank, good to always catch up with you in person.
Fabulous to be with you.
What's the sentiment like here for you? We haven't spoken in a while. What are you sensing here?
I'm just really starting here, so I really don't have a good feel for it, but I can share with you the Denver Gold Show. Yeah. My team went to both entities. There was small cap and then there was big cap, and the big cap was in Colorado Springs, where the royalty companies, et cetera, spoke, and that was great energy. And I thought it was a wonderful set of presentations, and there was lots of deal flow and conversation. So I thought it was very productive.
And that's probably the number one question I always get is, should I be in the GDX? Should I be in physical gold? What are you sensing? What's the best way to position yourself right now?
Well, we're active gold fund managers, so we're at the GDX as the ETF, but the marketplace is going to that. And what we found is that we've outperformed it. And how we do that is by understanding data. And it's expected that all these gold mining companies have to do all this data collection and make sure, like Rob McEwen was a leader on 3D graphics and looking for that big rich zone when he was building Goldcorp. The same thing as money managers. So what's the data? So what I highlighted was the cash flow return on invested capital, that if you bought Northern Star 5 years ago, and they're businessmen that were mining engineers, but they're business first, and they're in the gold mining business, their stock is up 800%. The GDX is minus 50. Now, what would you rather bet on a group of people that really are caught up with cash flow returns on invested capital? So if you took the top 10 best performing stocks based on cash flow return on invested capital, you outperform the GDX. So there are certain factors to look for, and you could really see that in those presentations.
And if we look across the markets this Monday, it's a sea of red, but gold's holding up, post-Fed, still holding up here. How do you see the gold market right now?
Well, I think the stuff in Deutsche Bank is a big issue because of the potential collateral damage, like Lehman Brothers. Going into the Lehman Brothers before going bankrupt, it was, well, the markets were skittish, but when they went under, the collateral damage and the ramifications went around the world, a rippling effect. So they have a massive derivative book. And the leader of Germany saying she's not going to support a bailout automatically creates this negative sentiment around the market. I think tonight's debate is phenomenal.
Yeah, and we're going to talk about that in a
now,
second.
That is another phenomenal event because of social media.
Right. So looking at gold, I know you weren't expecting a Fed rate hike in September, but the question now is December. Do you think that's on the table?
Well, it's a 20%, and we'll see. They'll talk it up as they go into it.
So even if there is, we move 25 basis points, what would that do to the price of gold?
I don't think it's going to be material. It's a CPI number, and I wrote about it last week showing a year ago that you had positive real rates of return when you look at 5-year government, 2-year government bonds. Now they're negative. Gold has gone up. If you go back, any time that you have this big inversion of interest rates, so we are in a secular bull market back in gold.
And the big story, silver, also performing well here. You liking silver these days?
Absolutely. Always recommending. Your best gift to buy your children, your grandchildren, your cousins, your friends, because they're not going to throw it out.
All right. Big news week this week. We have the OPEC meeting. What do you expect to come out of it, the summit?
We'll try to create some type of a supply restriction so they can get oil above $50, but it's desperate. And there's no collegial teamwork, and so I don't think it's supportive long term. The technology of America and what they've done on fracking, and now they've got that down to $50 a barrel to $40 a barrel. So if you're at $50 a barrel, all of a sudden the rigs start coming back in Texas because they know how to find oil, and they're making money at $40 a barrel.
And you mentioned it before, the debate, it's going to be bigger than the Super Bowl. Frank, what can we expect here? Lots of fireworks?
I think it'll be fascinating to watch because you have 1.7 billion people on Facebook now. 1.7 billion people. Right. So we're talking about more than 20% of the world's population can watch it and have access to it free. That's unheard of. So just like Kitco does a phenomenal job of streaming and the magnitude of your reach, just think of 1.7 billion people.
And people love debating on who would vote better for gold, Clinton or Trump. I know you've written on this. Where do you see it? How do you see it?
They're both great for infrastructure. That's one thing they have in common is infrastructure spending, and that's good for the overall, all the resources. Who would be better for gold? It's hard to say. They're both going to have massive deficits because.
Who would be better for the markets then? For the market overall?
I think that Trump would be better for the markets.
All right, Frank Holmes, U.S. Global Investors. Thanks so much for stopping by at the Minds and Money Conference. Always a pleasure speaking with you. And we'll have more for you on Kitco.com, so be sure to stay tuned to Kitco News.